Hey, welcome back to YT Finance, and today we are talking about Robinhood stock and why Hood stock dropped in price just to skyrocket back up. Now we need to determine where the stock could head from here, because currently short sellers are flooding into Hood stock because they think it will crash and burn after August 18th. We will go over the evidence for both the bullish and bearish perspectives of this stock by doing a deep dive into why analysts and short sellers are so bearish on Robinhood stock, while other investors like Cathie Wood of ARK Invest are extremely bullish. So will the stock plummet in price or will it surge? Well, let's find out. But first, go and press the like button right now for more stock news and analysis. Comment your thoughts on Hood stock down below, turn on subscription notifications if you are new, and now let's get into today's story. In a previous video, I mentioned how Robinhood's IPO would not be impressive, and it would likely fall in price, which was validated by their less than impressive IPO. However, we have to take into consideration when Facebook first IPO'd in 2012, where originally the Facebook stock price plummeted 50% over the span of 6 months, to where now Facebook is a $1 trillion company. And just like Facebook, Robinhood could have a comeback, but unlike Facebook, Robinhood stock popped much sooner, gaining itself over a 60% gain for its first week on the stock market. The reason for this was because Robinhood clarified that they would not sell stock immediately, and instead they said that they would sell up to 97.9 million shares over time. However, because of investors' fear, the stock did drop by 27% in a single day. Robinhood said that they cannot even start to sell shares until the Security and Exchange Commission approves them for transactions, which will most likely occur after Robinhood's second quarter earnings report, which is on August 18th. After Robinhood reiterated this, the Hood stock price found new life and surged based off of this news. Hood stock has been very volatile, with a 52-week high of $85 and a 52-week low of $33.25. The market cap is currently around $47.54 billion, and the average volume is 85.86 million. Originally, Robinhood started to rally on Tuesday when it surged by 24%, which put it higher than its IPO price of $38. Various investors like Cathie Wood from ARK Invest see great potential in Hood stock, so Cathie Wood bought 3.2 million shares of Hood stock to keep in her ARK Invest ETFs. When Wednesday came around, the stock skyrocketed and led to another 50% rally just to fall back down on Thursday, which started the major volatility we see, and which also recognized some of investors' fears, such as a stock sell-off. Because of this volatility, Robinhood was forced to use debt through credit to make sure the company had enough cash to clear its trades. Many venture capital firms will sell off some or all of their Hood stock because they got them at a 30% discount at $26.60. So as soon as the SEC gives the approval, they will sell, and it will take the Hood stock price down with it. Hood stock is very popular right now among traders and short sellers, and we know this because more than 12.5 million shares of Hood are being shorted, which equates to roughly a 25% short interest. This percentage is much larger than the average short interest in a regular company, which would be around 5%. Some stock traders even anticipate that the short interest will continue to rise as time goes on. The report quotes, "Short selling today is once again muted due to lack of stock borrow supply, as well as the high cost to short eating into the expected profits of the short trade." Now, to be clear, not everyone is betting against Robinhood who is shorting the stock. They are just taking advantage of the current volatility, and they think they can make a lot of money off of Robinhood. So they're not shorting the stock because they don't like Robinhood or don't think it's going to do well in the long term. They're just taking advantage of the current trends. Many of these short investors may be correct in their analysis, because Robinhood stock is not looking good because it's just a ticking time bomb to when institutions who got into Robinhood stock early will sell sell off their shares, causing the Hood stock price to crash. Stock algorithms and computer programs rank Hood stock as a bad investment right now, and these computer programs take into consideration both fundamental and technical factors. However, I think it's unfair to Hood stock in this instance because these computer algorithms really don't have much data to go off of because the stock is so new to the market. So let's see what actual stock analysts say about it. But first, in Robinhood's defense, the company has seen incredible growth numbers because they have doubled their user base since March of 2020. Robinhood is also very popular with young investors, which means that these young investors, when they come into more money, will be able to invest more, and that capital will end up invested mostly in Robinhood. Robinhood has also seen incredible growth of over 300%, which is amazing. However, I do not think this growth rate is sustainable because this was due to the lockdowns when people had nothing better to do besides download Robinhood and gamble their money away. However, some of these investors will actually receive good financial education, and they will probably stick with investing, especially if we consider how easy it has been lately to make money in the stock market. The main problem I see here is Robinhood's tainted reputation, and it's holding them back. For instance, when Robinhood restricted the buying of GameStop GME stock, they became the enemy of many Twitter and Reddit investors. Now, I personally do not have anything against Robinhood, and I still use their platform today, but Robinhood's troubles are not over. They are currently in 90 different lawsuits. They potentially have illegal employee trading of stocks, and we need to remember that they got a $70 million fine from FINRA, which is one of the largest fines on record. With those points being stated, I can put all of that behind me. Analysts and I, however, see a much larger problem, and that's Robinhood's current valuation. It's way too high and the stock price is way overvalued, so it will crash. Or at least it's going to correct. Even the CEO of New Constructs said that Hood shares are overvalued compared to their peers. Robinhood has around 18 million customer accounts, and the average worth of assets in those accounts are $5,000. However, when we compare that to another company in the same stock space, like Charles Schwab, they have around 30 million customers who have an average account balance of $223,000 per account. So in comparison, Robinhood has a price to sales ratio of 50 and Schwab has a PS ratio of 7.9. On top of that, Robinhood is projected to have a net loss of $500 million, while on the other hand, Charles Schwab reported a $1.27 billion worth of net profit last quarter. The current market cap for Robinhood is over $40 billion, but according to analyst estimates, Robinhood should not be worth over $9 billion. This would imply that Robinhood stock can fall around 85% until it meets the fair value of what its stock should actually be worth. However, ARK Invest seems to love Robinhood stock, but what do you think? Comment your thoughts, like this video right now, subscribe if you are new, and I'll see you in the next YT video.